Here are the crypto top headlines covered in this video. Crypto markets tick upward on Friday as Fed Chair Jerome Powell strikes mixed tone on inflation in new speech. Next, SEC met with Grayscale and 7 other spot Bitcoin ETF applicants in late November. Also, giant finance company announces it will exit the cryptocurrency industry due to increasing regulatory pressure. Plus, the SEC is facing another defeat in its recycled lawsuit against Kraken. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube, and would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, crypto markets tick upward on Friday as Fed Chair Jerome Powell strikes mixed tone on inflation in new speech. Bitcoin and the crypto markets ticked upwards on Friday after U.S. Federal Reserve Chair Jerome Powell appeared to express some reserved optimism about the American economy. Powell spoke to students at Spelman College in Atlanta about the Fed's ongoing strategy for dealing with inflation. The Fed chair says inflation initially sprung up due to a combination of strong demand and pandemic-constrained supply. The normalization of supply and demand conditions has played a critical role in the disinflation so far, as has the substantial tightening of monetary policy and overall financial conditions over the past 2 years. The strong actions we have taken have moved our policy rate well into restrictive territory, meaning that tight monetary policy is putting downward pressure on economic activity and inflation. Monetary policy is thought to affect economic conditions with a lag, and the full effects of our tightening have likely not yet been felt. The forcefulness of our response to inflation has also helped maintain the Fed's hard-won credibility, ensuring that the public's expectations of future inflation remain well anchored. Powell notes that the economic impacts of the pandemic are still materializing and acknowledges that uncertainty regarding the economy is unusually elevated. The chair says Fed officials are making decisions meeting by meeting. Like most forecasters, my colleagues and I anticipate that growth in spending and output will slow over the next year as the effects of the pandemic and the reopening fade, and as restrictive monetary policy weighs on aggregate demand. The FOMC, or Federal Open Market Committee, is strongly committed to bringing inflation down to 2% over time and to keeping policy restrictive until we are confident that inflation is on a path to that objective. It would be premature to conclude with confidence that we have achieved a sufficiently restrictive stance or to speculate on when policy might ease. We are prepared to tighten policy further if it becomes appropriate to do so. Bitcoin is trading at $38,728 at time of writing and is up nearly 3% in the past 24 hours. The total crypto market cap is also up around 2% in the past day, according to CoinGecko. Our next top headline, SEC met with Grayscale and 7 other spot Bitcoin ETF applicants in late November. The Commission has seen back-to-back meetings with a long line of industry figures seeking its approval for a spot Bitcoin ETF. The U.S. Securities and Exchange Commission has recently disclosed meetings with several asset managers regarding their proposed spot Bitcoin ETFs. On November 29th, the SEC said that its Division of Trading and Markets members met with several Grayscale employees and the law firm Davis Polk on the same day. Grayscale CEO Michael Sonnenschein was among those in attendance. The SEC held meetings with Grayscale on 3 other dates starting in 2022, the most recent of which occurred last month on November 20th, 2023. 2 additional sessions involved members of Grayscale's custody partner, Coinbase. Those meetings concerned a proposed rule change that would allow NYSE Arca to list and trade Grayscale Bitcoin Trust, or GBTC shares. Grayscale plans to convert GBTC to a spot Bitcoin exchange-traded fund. SEC also met with BlackRock and others. The SEC held talks with other asset managers last month. Notably, it met with BlackRock regarding its proposed iShares spot Bitcoin ETF on November 28th and November 20th. Attachments show that both BlackRock discussions concerned comparisons between in-kind and cash redemption models, which will determine whether some ETF participants transact with cryptocurrency or cash. The securities regulator also said on November 29th that it met with asset manager Hashdex days earlier to discuss the firm's proposed spot Bitcoin ETF. Other SEC disclosures indicate that the agency met with Bitwise, Van Eck, Fidelity, and Invesco on their respective proposals in late November. The agency also met with 21 shares on behalf of ARK Invest's spot Bitcoin ETF proposal around the end of the month. It does not appear that the SEC met with WisdomTree, Valkyrie, or Global X on their respective spot Bitcoin ETF applications. The SEC has not publicly stated any plans to approve a spot Bitcoin ETF, in spite of the fact that it has disclosed these numerous recent meetings. Our next top headline: Giant finance company announces it will exit the cryptocurrency industry due to increasing regulatory pressure. San Francisco-based company SoFi Technologies, Inc. is preparing to exit the cryptocurrency industry due to increased scrutiny pressure from banking regulators. SoFi Technologies, Inc. exiting the cryptocurrency industry. The company told crypto customers that they should either liquidate their accounts in the coming weeks or switch to crypto exchange and wallet provider blockchain.com. SoFi started 12 years ago as a student loan financing company, has since expanded into a number of other verticals, and received a bank charter in January 2022. Approval of the charter was contingent on a 2-year compliance period for crypto business. The company had to either obtain the necessary regulatory approvals for this or exit the digital asset industry. In August, the Federal Reserve said it was stepping up its review of lenders' participation in digital assets. Federal Deposit Insurance Corp., and the Office of the Comptroller of the Currency detailed concerns about the volatile asset class in January. Additionally, the Fed rejected a crypto company's application to become a member. SoFi, which initially entered crypto in 2019, was a high-profile participant in the industry, even hosting an event at Bitcoin Miami last year. But it has been a non-significant part of its business, which includes all crypto-related fees, with brokerage-related fees totaling nearly $6 million in the 3 months ending September 30th, according to SoFi's financial statements. Digital assets held total $139.4 million as of September 30th. SoFi is expected to report $2 billion in revenue this year, according to estimates compiled by Bloomberg. SoFi's crypto customers must switch to blockchain.com by December 19th or liquidate their coins. Our next top headline: the SEC is facing another defeat in its recycled lawsuit against Kraken. The Securities and Exchange Commission is suing Kraken for selling cryptocurrencies, but it looks like a recycled version of a losing lawsuit. The legal duel between the United States Securities and Exchange Commission and Kraken, a leading cryptocurrency exchange, looks like another misguided attempt by the SEC to exert control over an industry that fundamentally challenges an outdated regulatory playbook. The agency's lawsuit, filed in November, accuses Kraken of operating an unregistered securities exchange. The lawsuit isn't just a repeat of the SEC's past failures. It's also a glaring example of regulatory overreach that fails to grasp the essence of cryptocurrency. It mirrors the agency's actions against Coinbase, which mark a pattern of aggressive regulation that is both ineffectual and counterproductive. In its case against Coinbase, the SEC allegations similarly involved operating an unregistered securities exchange. The approach fundamentally misunderstands the nature of cryptocurrency exchanges. Unlike traditional securities exchanges, platforms like Kraken offer a diverse range of digital assets that do not fit neatly into the securities framework. This misclassification by the SEC reveals a lack of understanding of the unique characteristics of cryptocurrencies, which function as decentralized assets, often with utility or currency-like features rather than conventional securities. One of the most striking issues is the absence of technological neutrality, the principle that regulatory frameworks should apply equally to all forms of technology, without favoring or penalizing any particular one. By forcing cryptocurrencies into the traditional securities mold, the SEC is not only misapplying laws, but also showing a clear bias against digital assets. This lack of neutrality not only hinders innovation, but also unfairly targets platforms that are striving to work within the regulatory landscape. The SEC's aggressive stance risks driving business away from the U.S. to more crypto-friendly jurisdictions. This phenomenon, known as regulatory arbitrage, could result in the U.S. losing its position as a leader in technological innovation. The crypto industry is global, and excessive regulation in one country simply pushes businesses to relocate, taking their economic benefits and innovations with them. The Kraken lawsuit is set to become another example of the SEC's failures to successfully regulate the crypto industry, akin to the outcome of its actions against Coinbase. This repetitive cycle of aggressive and misinformed regulation is not only futile, but also harmful to the credibility of the SEC. It sends a message that the regulatory body is more interested in flexing its regulatory muscle than in understanding and adapting to new technological paradigms. The case isn't just an isolated legal battle. It is indicative of a broader issue within the U.S. regulatory framework's approach to cryptocurrencies. The SEC must move beyond its current, outdated tactics and engage with the crypto industry in a more informed and constructive manner. Regulation is necessary, but it must be reasonable, well-informed, and designed to foster innovation, not stifle it. It looks the SEC is set for another resounding defeat, which will serve as one more reminder of the need for a new approach by regulators. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.